What's going on, traders? So, I found myself talking a lot about narrative analysis recently and how we have to constantly be thinking about what other people are thinking and what they're feeling and what sort of thoughts are going through their head as price moves up and down. I thought it'd be helpful to lay out a basic system to introduce the four types of players who I think about and walk through some examples of what they would be going through as price develops. So, this is a little system that I really got from an old boss of mine, totally from a different industry, not a trading thing. She used to call this the "Who's Doing What Where" spreadsheet. I added an extra W for trading purposes, which I'll get into in a second. But basically, I'll actually show you the spreadsheet we used to work through. What it was a market research spreadsheet where we would be tracking all the relevant deals in the mining and natural resource field around us. We were a clean tech company and related to those fields. We were constantly looking for who else was acting, what sort of deals they were structuring with other people, who they were working with, what their pricing was. We were basically tracking a lot of things at the same time, and we were all competing for the same limited number of proposals that were out there. Basically, a lot of government money, a couple private deals here and there, but basically super competitive atmosphere. Really important to understand the cutting edge sort of thinking towards policy and deals. So it's a little more complicated, honestly, than what we have to deal with as traders. But I think it relates in a pretty direct way. This allows us to keep a finger on the pulse of the market, basically, because we're constantly able to quickly switch into empathizing and putting ourselves in the shoes of real players who are competing against us. And I think that's very important as traders to be able to do. If I'm a bull, I got to be thinking, okay, well, where are the bears kind of looking to get in? Where are they expecting me to cover? Other bulls, where are other bulls going to come in and help out my move and keep it going up, and vice versa. So it's a whole bunch of scenarios we can walk through in a second, but let me take it back to here. So this stands for who's doing what, where, and then I added and why. I think that and why is pretty vital, because it basically gives a reason for what's going to happen. And I think there's, as I said, four types of players. You could get more complicated than this. You get early and late people and all kinds of stuff, but I like going with these four. Basically, player one is live bulls, player two is live bears, player three is sideline bulls, and player four is sideline bears. And all this means, live bulls basically are people who are currently live in a long position. Live bears means people who are live in a short position. And then sideline bulls and bears means that they're not in a position, but these people are looking to get in something long and have a sort of upward bias to the market. And then these people are looking to get short. And do we have people who are perfectly neutral? Probably out there. But I think these are just good people to be thinking about because they represent potential volume. They represent potential order flow. They, all the stuff that we end up talking about in terms of, whether a breakout works, whether it fails, whether, a day trends or not. It really depends on the behavior of all these people and who categorizes as what. And I think if you really kind of think about how a session develops, at least this is personally with me, you could be all four of these people in the same session. You'd probably be all four of these people in the same, couple minutes, even the same minute, as price does something pretty dramatic. You could be super, see something developing in a really bullish setup, get super excited about it, enter live, be really excited about that, but then, hey, the breakout fails, comes crashing down. I cover my position, get out, and say, wait a minute, this is going to go south. I become a sideline bear, and then as it continues to push south, maybe I get into it and I become a live bear. So that's a quick example. I'll walk through a couple more in a little more detail in a second. So those are the four types of players. And last week I was writing about this specific move that happened. Actually, I forget the date, but I think this was about 2 weeks ago. But the point of this, or no, I think this was last Monday. Point of this is, if you look here, if you just zoom in on the first couple minutes in the opening range, just this bar by itself is pretty dramatic. Minute number one, this is all pre-market, and then as minute number one developed, this was a big green candle. So at one point, this looked super bullish, and then it obviously comes crashing back down, closes near the open. The next bar does the same thing and also fails above this high, comes down, but sort of closes close to the middle. Then we get this wacky, I guess people would call it an indecision candle or something like that. But basically, price comes crashing down, can't close down and close back up. A lot of confusion in here at this point. And if you're just looking at these first couple minutes, it looks like a pretty tight battle, right? Up and down, up and down, up and down. Very similar to most mornings, most openings, opening ranges on the NQ. But then if you kind of fast forward a little bit, go down to what happened over the course of the rest of the morning, it's this huge crash. And it's interesting to think how differently people who are playing basically at these first couple minutes were thinking versus, what they were thinking down here and down here and down here. And I think it's really important to consider the different types of people and how they can flip sentiments. So I go to a different article I put together also last week. This whole thing about being ready for a counter move. And the reason I wrote this was that at certain types of opens, I can get caught in pretty difficult territory. So this was the recent high that we had made right before the open. Then the open happens, and instead of going up to test the pre-market high, which is basically what I'm always looking for, we go super bullish on the way up, break this high. We look like we're going to test that almost like a magnet level, but it doesn't get there and instead fails back down hard. And the next minute, we break up again. We get even closer to pre-market high. We break both of these highs, but we don't quite make it there, and it just flips down heavy. So I've had to go at this point from being a sideline bull to an active bull up here getting trapped, to then closing out my position as we came down here, being an active bull again as we scooped up seemingly orders down here and then rushed back up, super excited, ready to keep loading up, and then nope, just kidding, bam, had to cover again, got trapped again. So getting trapped twice in a row, you got to start reconsidering your, I guess what Lance Beggs would say, how in sync you are with the market. And this is a little note card I put together because I think it's a super pertinent thing. I get trapped here all the time. This is exactly the type of scenario that I get trapped in, and it's something I got to get better at recognizing. Put together these animations because I think it shows exactly what hindsight charts. You just see this big red thing, and it's easy to say like, oh yeah, okay, it was just a big red scenario. What are you going to do? A lot of a lot of bears were dominating. Sorry, so hey, that's it. But it's really important to consider how things were developing during the life of the bar, because the more you see this big green thing developing, probably the more excited you're getting. The more that, if you think about the other players in the market, live bears are probably going to cover as you start breaking up, right? And then sideline bears are just saying, forget it, I'm not even interested in anything to do with this. Whereas sideline bulls are probably lumping in and coming in and say, oh, this is great, we're going to break out above here, we're going to, a lot of energy basically coming in. But, and here's the big thing, what happens when that scenario that people are supposedly expecting does not happen? And instead we go up and then stall and then do this baby right here. Because this is basically a kind of crappy drawing of there we go. It's a crappy drawing. It's supposed to be anyway of the scenario up here. You can sort of see the two in the same screen here. As we're going up, super happy and excited. But then as soon as we don't get there and we start to fail, what happens when we fail back down below this high and below this high, and we start to fail back into this bar's range? It's got to look kind of bad for the breakout traders, right? And then what happens is we fail back from a green into a red candle. That's looking really bad, right? So I think you've got to think about where people are coming in with their orders, why they're doing it, and you start to see a really strong narrative develop for a really, really strong bearish move. So to repeat that, I got these 4 points down here. You got to fail at this high, right? Below this level. You get another fail down here. You then take the price all the way down here and go from a green candle to a red candle. And then we eventually even start to break and to attack this low. And then that's what happens afterwards. So just this by itself, it's a pretty dramatic move. If you think about how much ground we've covered from here to here, just this candle by itself is 15 points. And and then the move by itself, it carries on to develop into this later fail of a fail and a scoop. But it's a really interesting way to kind of like look at the development of the craziness at the open here. Obviously, NQ opens are particularly nasty and choppy, and they tend to be where a lot of traders go to die. But it's also where you can really learn a lot about where the best traps are set. If you know that a lot of people like to look at pre-market levels at the NQ, which that's something I'm convinced about, well, what better place to trap people than when everybody is thinking that we're just going to go test that level and then keep going to the moon. Yeah, it's when everybody's excited and they sort of have their blinkers on. Well, now what's the word? But basically, they're feeling super confident and they've taken their safety goggles off, I guess, because they're ready to go. That's a terrible metaphor, but you sort of see what I mean. Like this is a great place, and I thought I'd highlight it as a place where I stopped thinking about what other people were doing. I got trapped twice, and then I eventually got back in the move when we came back down, but it was only because I talked myself through it and said, okay, well, been trapped twice, and as I'm coming back down here, think about the people who have been trapped like me. Probably are thinking, I'm pretty much done. Like live bulls are definitely exiting the market as we come down here, and by the time we come down to go from green to red on this candle, a lot of people are probably saying, a lot of the bulls are saying, I don't want anything to do with this market. I'm going to wait till something else develops. Maybe I'll wait till we come back down here and then test the low, buy in, and then have a breakout fail to the bottom and then move back up. That's where bulls are probably going to come back in, right? But who in their right mind would really be buying right here? Not very many bulls, I think. So at that point, you've got a really one-sided market, and that to me is, I guess I'm a scalper. I don't really know how I'd categorize myself, but as somebody who's pretty short-term focused, that's a one-sided market. This tells me that bears are in it, more bears are looking to get in. Bulls are not in it, actively looking to get out, and the ones who are just typically bullish on the day, they don't want anything to do with this particular price action right here. So I thought I'd walk you through this little example here, kind of highlight it, and maybe talk through a couple of the different scenarios. So let me try that one more time, just to hammer it home. I think as you look at breakouts, you've got to consider that bulls are super excited, bears are not, and that's true of live and sideline of both sides. But as you start to fail, a fail is really interesting because at a fail is where Bob Vollman would probably call double pressure, because a failure, think about the different acts that are happening. A bullish trader who is bought up here is getting trapped, is feeling pain, and is saying, I want out. So to cover their long position, they've got to sell, right? So there are sell orders just on behalf of the bulls who are exiting. So sell orders coming in. But then also, as we fail down and price looks increasingly negative, more and more bears are coming in. And if they're coming in short, their orders represent, obviously, more selling pressure. So we've got double pressure. We've got the bulls who are exiting with their sell orders, and we've got bears who are entering with their sell orders. So instead of a one-sided market where, that's not the right word. Instead of just one side taking action somewhere and saying, okay, well, here's where I'm going to take a breakout trade, you've got both sides acting in one direction. And that's a super important point to think about. If you're interested in looking into that more, Lance Beggs talks a lot about this, but Bob Vollman is also really good on this subject, about double pressure specifically. So I hope that helped. I thought that was a useful sort of little exercise to walk through. And if you have any questions, drop a comment, or you can find me on Twitter at Structured Trade. All right, see ya.